Good afternoon, everybody, and welcome to our live stream, our Finance Fridays with none other than my brother, Michael Blair, who's going to talk to you today about stocks and building wealth. I am so excited about this. I saw you do a presentation to the NAA, the Greater Sacramento NAACP. Shout out to Miss Betty Williams, but the information you provided was invaluable. I'm still scared to click the button on the Robinhood and the other one you were talking about. I downloaded the apps, but maybe today you're going to give me that courage that I need to go ahead and click that button and make it happen. So with that, Mr. Michael Blair of the Neighborhood Innovation, I want to say Neighborhood Innovation Project, but that's probably not right. So I'm going to let you introduce yourself and talk about your company and get into your presentation.
All right. Thank you so much, Lee. I appreciate it. Thank you for the opportunity. And it's just so dope that we're doing this today on, well, what's now recognized as the Juneteenth holiday. It's actually tomorrow, but, we get the day off today, and Biden signed it into law. So we're good to go. And we can talk about that all day just by itself, right? But we're going to go ahead and get into some another type of independence, financial independence, which is really should go along with this Black independence, I think. Man. So anyway, thank you all for popping in, and I'm just going to jump into my slide set because I'm new at StreamYard, so I need to make sure I get this right. Let's see, share screen, walk it through. I'm kind of talking as I'm doing this to make sure I'm getting it right. I pick this one. Wow. Okay, and I'm gonna put this in presentation mode. Oh, sorry, I'm starting off on the wrong slide. My apologies, y'all. Okay, can everybody see that? I think we're good, right? Okay, I can't hear anything, so I'm just trusting everything's good. I'm gonna just go on with my mission.
Your screen is up. It's not in presentation mode, but I can see it.
Oh, interesting. Okay, it is in presentation mode for me, so I don't know what the difference is. Let me try something real quick.
I didn't want you to be talking to yourself because
any difference now?
No.
Same. Okay.
The same.
Let me just try one more thing. See if I can get it. Okay, now it's not in presentation mode, but I'm gonna push this again. And now for me, it is in presentation mode. But does it look different for y'all?
It doesn't look like presentation mode for me, but I can see the slide. So
all right,
we'll
just rock with it.
Yeah,
we'll rock with it. Thanks. Okay, so Neighborhood Innovation, we are a nonprofit, and we've been in the business maybe just a couple years, but prior to that, we were part of another nonprofit that just kind of rolled into this one. So we just kind of pulled the best of what we wanted from that and turned it into Neighborhood Innovation. Some of the stuff we do, just real quick, is we work with a lot of nonprofit groups. We work with a lot of neighborhood associations, schools, different entities to help them build capacity. So we're kind of the nonprofit that helps other nonprofits. And then we took on a big initiative, which is financial literacy. And that's just, it's so key. Every time we were helping folks, we'd realize that finance was an issue. Every time finance is an issue. And we really learned it was because folks just didn't take the time to learn what they need to learn. Of the countless events that we do like this, we ask a question, every audience, and we say, hey, how many people actually had families where they sat down at dinner time as a family and they ate dinner and discussed what was going on, and they incorporated finances in that conversation? And time after time, I don't care how big the crowd is, only a few hands would go up. So we realized that this stuff just really isn't being taught the way it needs to be taught, especially to our communities. And even with me specifically, I remember when, I saw my mom one day just kind of frustrated, and, love my mom. So I seen her frustrated. What's going on, Mom? How you doing? What's up? She said, no, just go play. Just go on, do your thing. What she was doing is she was trying to protect me because she was paying bills and she was frustrated about paying bills. And that's what I associated with bills are bad. And paying bills is something that's frustrating. Instead, that was a missed opportunity. That could have been a teachable moment to say, hey, come on over here, Michael. Let me show you what I'm doing. This is money. This is how it works. And a lot of us miss that opportunity. And it's because our parents love us so much. They want to protect us from that. But instead, with my daughter, I was able to connect with her And I instantly brought her into the conversation because she did the same thing to me one day. Dad, what's going on? Why are you frustrated? And it just clicked with me right then and there. So we worked together. I showed her all the game I could. We read a book together called Rich Dad, Poor Dad. That was the game changer. She had the teen version, I had the adult version. And from there, we were able to talk the same language, right? We were able to talk finance. And I'll tell you a little bit more about her later, but she's doing really good. And a lot of it is because of that foundation that was laid. So let me jump into the presentation real quick. This slide talks about a lot of things that we do with the free workshops. And so you see credit building, home buying, so on and so forth, all the way down the list. If you go to the website at the bottom, you can RSVP for one of these. We do most of these every month. We kind of switch it up, but you'll see a kind of a combination of all these. We have the stock one just a couple days ago. And then we have the home buying one, I think on Monday it is, Monday or Tuesday, I can't remember. But either way, they're all free. So if you want to get in and learn, come on through.
The slide didn't advance.
Oh, all right. Let me try this different.
There we go.
All right. Okay, cool. So this is the free workshop. So my apologies. I'm just going to work it this way. This will be a lot easier. And then this slide here is a special program that we have. So we have our regular free workshops, but this is a special program that we have for only 40 people. And if they click that link, they can apply for this. Not everybody will get accepted because we only have 40 slots, but they'll go through the same classes. They'll just get a small stipend. And the reason for that is because we just want to give them that boost. Because a lot of people come and learn, but they don't take that next step. So we attach some money to it. Then we're actually removing an obstacle for them. So now they actually have money to start with to develop their wealth. So we'll talk more about that if we got time at the end, but that's the website. If anybody wants to take a screenshot or share it with someone, feel free. And then real quick, when we're a nonprofit, we always just have to shout out our sponsors. Some of these logos you might recognize, but these are some of the folks that help us do what we do to make it free. So we're able to really push this information out to the community. If we charge, some folks won't come. So we're just saying, let's let the doors open, do it as free as possible because it's so necessary right now. So shout out to the sponsors. And now I want to just set the case real quick just to say this. This is wealth. It's a Pew Research study that was done. Some of you may be familiar with these numbers, but what this shows is the gap in wealth. So don't think about income because income is, there's some issues there, but we're just talking about wealth. Total assets minus total liabilities and what you're left with. This is what it looks like across America. Black and browns, we're just at the bottom of the totem pole. What I say is we want whites to do well, but we also want everyone else to do well. And there's enough to go around, and we all need to be more at that average versus so low on the totem pole. I can show you some historical numbers. I won't do it now, but you'll see this has been the trend since way back. I think I investigated all the way back to 2007, and we were low on the totem pole then and haven't made much advancement since. And we all know there's statistics coming up at 2053, Black wealth will be at 0. That should be scary to people. And if folks hear that and they're not scared, something's wrong because that's a really desperate place to be. When you're desperate and you have no wealth, you make desperate moves, and then that potentially comes along with a lot of problems. So we need to look out for each other. With that, I coined this term, Black wealth emergency. So if there's a Black wealth emergency, what that means is if you hear there's a fire, what do? You stop, drop, roll, you take action, you do something. We are in an emergency situation right now. So we all need to do something different, right? We continue to do the same, Blacks will continue to be held at the bottom of the totem pole. So we have to take action steps. Now, part of the reason we're at the bottom of the totem pole is because of a whole lot of systematic racism. We can go down the list of all the reasons why. Part of it is because of us, right? Some of us get money and act a fool, right? Some just don't pay attention to what they're doing. Some people try to live in lanes that they're not built for, right? They're not, if you're not at a certain position, don't live like you're at a certain position. The fake it till you make it thing, don't do that. Don't fake it. Be where you are and have a plan to get to where you want to be. But the folks that are faking it, they're spending money in a way that doesn't match their bank accounts, right? They're spending all their potential to build wealth. And so we have to get out of this culture of trying to look like rap stars, look like rock stars, and let them be them and you be you. But you can build wealth to where you have as much money as them, or and a lot of times when you look at them, they're in way more debt than you might be, realistically. So the thing is really just try to make your situation the right situation. And part of the way we do that is we try to get you to focus on this. Looking at money like it's art, right? Art, you appreciate, you study it, you build it, you make it, you learn how to respect it, and then you just watch it grow. So if you can get in tune with your money, that's going to help you. That's going to help you make the right moves. Now, this is your goal, but we know some people can't even start here, right? Some people have to start here. Some people have to start at a very basic level and learn how to plant those seeds, learn how to farm, learn how to build and grow, right? It's not instant, but you have to be strategic. So that's what we're here to do, to teach strategy so you can get to, your desired outcome. So with that, this is Securing the Bag Wealth Building Series. And as you see, there's some dates coming up, as I spoke on earlier. These are the actual classes that we do. And I'm taking you through a brief version of our stock class that we do that happened the other day. So let me do this. Again, we have the classes, and then we have the special program where you can get the incentives. So I just want to make sure that you guys understand the difference. Now, with that, I want to jump into the bag and start talking stocks. Let's get specific. I'm going to start from the basics. What is a stock? A stock is ownership. And when people say stocks and shares, the two words are used interchangeably, but there is a difference. So shares measures how much stock you have in a company. So somebody says, hey, I have stock in Microsoft. Cool, that's a good thing. I'm glad you have stock in Microsoft. But they say, I have 10 shares, where someone else might have 2,000 shares. So it just says that that person owns more than the other person. So however many shares you have measures how much stock you have, right? So just remember the difference between those terms, and it'll help you out. Now, I know I'm not in screen sharing mode, but I'm gonna do my best with this. I usually make folks guess in advance, but I think you might be able to see the numbers ahead of time. So this is what happens. In the class, I'll say, hey, which of these stocks gained in value? So in 2012, January 1, I just looked up what was the stock price per share for each one of these companies for one share. And that's what you see. And then I look January 1, 2021, and I make the class guess which ones went up or down in value. Then I ask the question, of the ones that went up, which one went up the most? And I'll have everybody guess. And we won't go through that exercise right now. I'm just going to give you the answers, but boom, here you go. So you see that Tesla did a huge jump. Had you bought one share of stock in Tesla in 2012, January 1, you would have spent your 27 bucks, but you would have made $744 profit per share. So back in 2012, had you spent 100 bucks, you'd be sitting with over $1,000, $2,000. And that's not a lot, right? All the stocks did well. Tesla just did the best, but even Target, you made some profit. And then what I do is I have to paint the picture, give it a fair picture, is that not all stocks go up. We know this, right? So there's companies that are around, they fine tune what they do. The longer they've been around, typically the more money they make because they had time to build systems, continue to refine things. But that's not always the case because look at this. Look at Sears. We all know the name. Back in 2012, $52 a share. 2021, 19 cents a share. So that stock went down. So it's always a gamble. Nothing is guaranteed in investing. However, everything is a risk, but there is risk and then there's educated risk. If you take educated risk, You still might get it wrong, but you'll get it wrong less amount of the time. You won't get it wrong as much, right? Because you have some education behind you. I want to talk about kind of digging into the stock, and we're going to look at this technical stock selection and evaluation. But what I'm doing is I'm painting this technical picture. Then I'm going to show you an easy way to start, because this is not where you want to start, but some of you may want to gain the ability to get to this point. So I just want to give you a quick screenshot of what that looks like. This might be a little small because typically I'll blow this up and make it larger, but I'll do a little bit of reading. We're not going to read much of what's on the page, but I just want to kind of get you the sense of what's going on. There's an organization called Better Investing, and they're a resource for investment groups. There's hundreds of investment groups across the nation, and these are just individuals like you and me that decide to, hey, let's start an investment group. Let's invest together, right? They pull their money together, make it happen. So Better Investing is just a resource for all those groups. And they have these stock study reports. So folks from these groups will do these stock study reports, send them into Better Investing. They'll publish them so that folks can see. It's just another tool that's out there for you. And this person analyzed Disney. Took a look at it at the top. If you can see, it's the stock price, it's the person's name, everything. But then it starts to get down into the questions. The first one, discuss why you consider this to be a highly qualified growth company that should be invested further. Please include comments on the historical sales, earnings per share growth, pre-tax profit margin, return on equity, and debt. Now, that's a language that most of us don't speak every day, right? So again, this is the technical look. This is what you might want to grow to. But in their analysis, it makes you think, it makes you pull up information, it makes you research. And that is when you start to get into this educated risk, because now you see data signs. And once you can read the data, you know a little better about where you're going. Think of it like this. If somebody says, you're asking them for directions, you want to get somewhere. They say, hey, go 10 miles up the street and then turn left. Okay. In your head, you can probably estimate what 10 miles is, maybe not, you might get close, whatever. But instead, if they said, here's some signs that you look for along the way, here are some buildings, just certain things that you would look for to kind of give you triggers and marks. Well, now you're able to read the signs, read the data, and you're gonna be a little more confident when you're making that drive, because you're gonna know if you went too far, you're gonna know what you're looking for, you're gonna be on alert, looking out for the right things. So this kind of just puts you in position. So again, this is the technical piece, but I'm going to show you how you can get started before you even get to this level. This report, I just want to show you, there's a page 2, right, where they get into the growth rate for sales, earnings per share, price earnings ratio. All these are terms, again, you may not talk every day, but you can start to build your knowledge to where you get there, and you can do a stock study report like this. It'll get into graphs, you plug in data, and you eventually get to the point where you're buy, sell, or hold. So this is when you're like really top of the game. But we're going to jump back to the fundamentals. We're going to break it down and make it real simple for you, right? You're not to that point. Well, many of you may not be to that point yet, but you can jump on one of these apps, and this makes it really easy for you. So there's kind of the fundamental level that we're going to break it down to. And I say you got 5 on it. If you got $5, that's all you need to get in the game, right? Before, you couldn't do it that way. It's because of what's in the middle, fractional shares. This was a game changer, and I seriously mean that. So many people were priced out of the stock market because they're saying, hey, it's too expensive. I can only afford 1 share, or I can't even afford 1 share. So I can't even enter the market, right? And it was just too risky because some of the share prices were too high. And you say, hey, if it goes bad, I'm going to lose too much money. So there's a lot of risk involved, right? Well, now, because you can buy fractional shares, this is what it says. If for 1 share, let's say, of whatever company X, it's $100, right? Before, you'd have to save up your money until you make $100, then you can buy the stock. Today, you can say, no, I only have $5. you can buy $5 worth of that one share. So you're buying a fraction of it. What that means is you can get started today. You don't have to wait until you save up that $100. And that really changes the whole game for a lot of people because it makes it where you have a much lower entry point. Before you couldn't even enter, so you'd spend your money on something else, you give up, you just think, hey, this isn't for me. But guess what? It is for you now. So if anybody tells you they don't have enough money to get in the stock market, I want you to dig in your pocket, give them a $5 bill, and tell them no more excuses. Let's get down to business, just like that. These are some of the apps down at the bottom that you can do that with. But I'm going to tell you this, Cash App, you can do Cash App with $1, right? So if that person doesn't have $5, give them one. If you don't have $5 in your pocket, give that person $1, tell them to get on Cash App and start buying some stock. So it's that simple. I'm going to show you an experiment that I did. I happen to use Stash App. I actually do have accounts with Robinhood, with Acorns, with Fidelity, and I haven't tried some of the other ones because I already have too many now. But this is an experiment I did with Stash App because I said I'm in an investment group that I might be able to talk about later. But basically, it costs $1,000 to get into that group. And so I said, there's some people that don't have 1,000. And so how can they get 1,000? How long will it take them to build up 1,000? So I came up with this formula. And basically what I did is I took $100 and I pulled it out of and I opened up a Stash account and I connected it to my bank account. So I had Stash pull out $100 for an initial deposit. Then I scheduled it to pull out $5 from my bank account every week, right? $5 a week. That wasn't going to hurt me at all. And I figured most people won't get hurt doing that. It's going to be a stretch for some, but most people can accommodate that, right? All right. So when I did that, I measured it a year later. I had a 104% growth. Now, in the industry, anything over 8% return is typically considered good. Well, at 104% return. So that's beyond good, right? Then I measured it from that point until the next year. I had a 344% growth, right? Now, did I pick all the right stocks? Yeah, well, yes, but I lost on some. So it could have been even higher, right? But I didn't put a lot of analysis into it because, again, this was an experiment just to see what would happen, right? How fast it would take to get to 1,000. So I didn't want to make it too technical. I just kind of picked some things, some very general things. I'll kind of go over those in a minute. All right, so July 2020 is the last time I actually done measurement, and what it spells out is $880. That was my initial 100 plus my $5 a week, and I ended up spending $880 out of my pocket, but my profit was $3,000, and so that's just in a short period of time. Now I'll tell you this: at the time, as you can see on the screen, the total balance was close to $4,000. I haven't done the measurement yet for July of this year, but I'm going to tell you this, my total balance in that account is about almost $8,000. So the percentage is even higher. I'd have to do the math to break it down to find out exactly where that is. But again, just an experiment just to see what would happen. This was money I wasn't really terribly concerned on losing, so I took some bigger risks than I maybe normally would, but most of them paid off. At one time, the account was close to $9,000, but then I was heavily invested in Tesla. Tesla wasn't growing as fast and kind of slipped back a little bit, so my total went down, but I'm still winning, right? Crazy percentages, I know, when I do 2021, but for right now, as you can see, quite a bit of profit. See, I'm going to jump to the next slide. I'm going to talk a little bit about investing versus trading, dealing with stocks. And many of you have different levels of understanding of this, so I'm just going to break it down real simple. Traditional stock investing, where you're buying a stock and you're holding on to it for a long period of time, like years, right? You say, hey, I think that Microsoft is a great company. I know it's going to have its ups and downs, but I believe in it. So I'm going to continue to buy it, at the right points. Everybody has their own strategy, but I'm going to continue to buy it and hold on to it just until I feel like I'm done with it, right? So that could be 5 years, 10 years, 20 years, whatever it is. That is the traditional kind of, stock investing for the long term. Trading is a much shorter period of time. So if someone says they're a trader, they're doing things on a much shorter time frame. They can be investing as well, but if they're focused more on the trading, it's much for a shorter period of time. So for instance, like day trading, same day they're buying and selling. So they're not letting anything sit overnight. They're pretty much just trying to make as much in the market as they can that day, and then they're done. That is not for everybody because it takes a lot of focus, a lot of attention. You have to keep your eye on it the whole day. Some people love that rush, and that's for them, right? And if you're built for that, do it. Get involved, learn everything you can, be successful at it. But some folks are going to be like, nope, I don't want to do that. That's too much. I'd rather, focus on the long term. So it's up to you. It's your strategy. There's options. Options is one of the most difficult things for me to describe, but it can be highly profitable, and there's plenty of resources out there. But basically, options is you're buying contracts. Each contract is 10 shares, and you're buying that contract for a certain period of time. You can buy the contract for a couple of days, a week, a month, a year, 2 years. It kind of depends, right? And there's a lot of technicality in it. If you want to be really successful at it, you have to learn the Greeks, the gamma, the alpha, all these different data points. So anyway, that's options. I won't get a lot into that, but I just kind of want to give you that brief overview. Then there is Forex, buying and selling money. So every country has its own currency. Those currencies go up and down. There's the yen, there's the ruble, the American dollar, all these different currencies. So you can actually buy them when they're low, sell them when they're high. You can make profit. It's a whole market that a lot of folks are not familiar with. So that brings opportunity, just like options, Forex, and even commodities, things that people aren't really in and they might have heard about but don't know much about. There's less competition there, and sometimes that can be a benefit, and you can get in and make a lot of money because now you're kind of a highly specialized person, right? Commodities, this was just a trip to me, but you can, metals, livestock, corn, energy, you can buy and sell this stuff. They've been doing it for, years and years. That's not a new thing. So commodities, yet another thing that not a lot of folks know a lot about. But again, you can kind of specialize in that. I've never bought or sold any commodities. So it's kind of a new thing for me. But again, it's an established industry. And then cryptocurrency, which I'm not even going to touch because that's like a whole class in and of itself. But we know there's a lot of different cryptocurrencies out there. Some are on hype. Some have some longevity. Some, there's all kinds of different nuances to each one. I do own some cryptocurrency, but I'm not really the one to really speak on it too much. Advantages, I made some money, but I'm not nowhere near an expert on crypto. So with that, let me go on to the next slide. This one is one I want you to take a screenshot of if you can, because this one and the next one gives you some resources. We had talked about the different apps that you can use, right? And these, what you see under here are referral codes. So for instance, let's say you went to Stash App, stashapp.com, open up your account, you can get on and have an account, you're good, right? But if you get referred in through us or someone else, but if you use a referral code, what happens is when you get your account, they will give you $20 and they will give us $20. So that's part of the way we fund ourselves as a nonprofit. Because we don't want to ask people for money. Instead, we just ask them to use referral codes, and then that's what gives us money. That money does not come out of your account whatsoever. That's Stash App just giving that money out because there was a referral that happened. And Robinhood does something similar where they'll give a free stock if you get referred. So you'll get a free stock, we'll get a free stock. It could be a great stock, or it could be a stock that does nothing. It's just kind of luck of the draw, so you never know. And then Acorns, it says $5 they'll give, but they run a lot of specials. Like it's, for a particular month, they might do $20, or they might do all kinds of other things. So if you're thinking about getting one of these accounts and you don't have one already, feel free to use our referral code. Definitely not a must. You can do it any other way you choose, but it'll help us and it'll help you at the same time. And then researching stocks. If we have time, I'll open up finance.yahoo.com. It's one of my main go-tos to get information on stocks. There's a lot of information there, but if you learn to read certain things, it could be real simple, and they pull a lot of data all in one place for you, so you really don't have to go too many other places to get stuff. Let's see. And then if you want to join our classes, our free workshops, that's the text right there. Text secure TB as in secure the bag to 81010. Get on the text message list. And then our classes, neighborhoodinnovation.com/wealth. And then you see at the bottom it says survey. We always encourage folks to take a survey whenever we do any of these workshops, even one like this today, because what happens with nonprofits, some of you know, you get funding from other places by showing how effective you are. And when we do surveys, that's our way of pulling data to show, hey, we are reaching the community, and that helps us. So we're not ones to say, hey, give us money to individuals. Instead, we rather get it from corporations that are giving it out already. That way it keeps it free for you. So that's slide part one. And then number two, these are some of the places that I go to get wealth information. You may recognize some of these. Instagram, you see those handles. Those are ones that I like that kind of present the information in a really down-to-earth way, make it real plain, and they're typically looking out. All these are Black related, so they're kind of geared toward the Black audience. So I just like their flow. So I definitely recommend them. And then on Facebook, you got a few there. And then again, finance.yahoo.com. And then, as we talked earlier, betterinvesting.org. This slide, I want to, I get the questions, what stock should I buy, so on and so forth, but it's all about your stock strategy. And the reason your is underlined because it's going to be different for every individual. Your bank account, your financial goals, your financial responsibilities are going to be different from the next person. So there is no one answer to any of these questions. But when I say, when people ask me what stocks they should buy, I tell them a few things. One is they need to figure out what they're most interested in, because some people say, I want to buy stocks in companies that are going to make a difference. Well, okay. So there's ways you can look up groups of stocks that focus on a particular interest, right? Green technology or whatever it might be, right? So that's your focus. That's where you go. Other people are saying, hey, I don't care what the stock is, as long as it's gaining money, I want to buy it. So that's kind of a different strategy, right? Some people might say, hey, I'm just going to buy stock in companies that I'm familiar with because I shop a lot at these 3 stores. And I want to feel like when I shop there, I'm actually paying myself back as well. Okay, boom, that's another strategy. So there's no one answer, but it's really up to what you want to do, right? And my contact information will be shared either now or at some point by the time we end. And if you want to follow up with me directly, I can kind of help you through that first question if you need it. And then how much money do you use to invest? Again, that's up to you. How much do you have in your bank? How much can you afford to risk? Because it is still a risk, right? You might want to start off with some people open up fake stock accounts. And I probably should have put, matter of fact, I'll add that to my resource page, the all-in-one pages. But there's a couple sites you can go to do fake stock accounts where you can just buy and sell stuff, but there's no money involved. So it's just kind of like a play account, right? Or if you choose, you can go to Cash App and pull out, $1 or maybe $10 and just start buying stock because you're only risking $10 at that point, right? So it depends on how you want to do it and how much you should invest. Probably the only rule of thumb I'll give you is don't make any one trade more than 5% of what you have available. So if you say I have $100 available to invest, don't put more than $5 on any one trade. If that makes sense. That's kind of a general rule of thumb that's out there. That way you don't lose all your money ever, right? If you make a bad move, you have time to recover. So, you have to, again, it's your strategy, but that's just kind of a general rule of thumb to think about. You may want to raise yours to 10% or even 20%, but again, that's your call. And then do you trade or invest? It depends on what you're built for. Some people are not built for that day trading. That's just too much for them. So they stay away. And other people are like, that's what I want to do. That speaks to them. They love it. And if they get good at it and things work out. Also, down here, bonus advice. This is two things I want to tell you. Focus on percentage of growth instead of dollars, because some of you may not have a lot of dollars to work with. So you may say, hey, I'm only going to invest $100. That's not going to bring back much. Doesn't matter. But think about this. Even if you just invest $1, you study the stock, you feel it's the right one, you put $1 down, and it doubles in price and you make $2. $2 will not change your life. But guess what? You just got 100% return. That is a great stock, right? If it's returning 100%. So that means your research has gotten you the right stock. So when you do gain more money, you're going to learn what stocks to invest in. And if you're helping someone else who might have more money than you, you can kind of guide them in the right direction. So focus more on just what stocks grow, because you might say, Tesla is hot and it's growing at a certain rate, but then there's another stock that happens to be growing more, but it's not as popular. If you're in it to make money, you want to just get with the one that's going to grow the most. I don't care how much money you put on it, because every dollar that you have, you want it to produce for you. You don't want it to disappear. You don't want it to sit. You want it to produce. If it produces a penny, 10 cents, 25 cents, whatever it's going to produce, you want it to just grow. And so focus on the percentage instead of the dollars. Also be cautious of hype trades. People will get hyped about something. They'll buy the stock. When that hype goes away, the stock goes down. Now, if you're super savvy, you'll get in at the right time, get out at the right time. But a lot of times people get hyped on stuff and they think that hype's going to go on forever, but it doesn't. An example is Dogecoin. People have been talking about that. It's been popular. I'm not going to say you shouldn't have invested in it. I know people who made money, but those are the people who knew how to read the signs, when to get in, when to get out. They knew it was a short-term situation. GameStop and all that. Because it was in the news, everybody was talking about it. Then everybody wanted to get in on it. But then you see everything fell. If you got out at the right time, you're cool. But a lot of people lost a lot of money. So don't, kind of control your energy, control your anxiousness, and don't go for every bone that gets thrown out there. Instead, really think about it, come up with a philosophy of why it's the right buy. If it's just off hype, then you need to be really savvy about when to get in and get out. But if you don't feel you're at that level, I wouldn't get involved. So just something to think about. Some keywords that we went over: stock versus shares. We talked about that. Fractional shares, investing versus trading. One thing I want to cover is ETFs. That's exchange traded funds and mutual funds. Very similar. You'll kind of hear them used interchangeably, but I'll just kind of talk about the similarities. Basically, it's baskets of stocks. So you have one stock, it's Microsoft, right? You have another stock that's Hewlett Packard, right? Two separate companies, two separate stocks. You might have a ETF or a mutual fund that is a basket of tech stocks. So you have a fund manager that manages that basket of stocks, and they choose how many tech stocks they put in that basket, what kinds they put, and how many of each that they put in. So you don't manage anything. You're just buying a piece of this basket, right? So when you say, hey, I want only green technology stocks, there is a ETF or mutual fund, a basket of green technology stocks. Again, you don't pick the stocks, but stocks are picked for you by a fund manager, and you're just buying a piece of that. So if it does well, you do well and make profit. So that's ETF. So if you're interested in social enterprise stocks, or you want to just buy finance stocks or whatever, then you might want to look at ETFs or mutual funds. There's also like a Standard & Poor's, a Dow Jones Industrial Average. There are different ETFs that just invest in, I don't know if I want to dig that deep. Basically, they just invest in a bunch of the companies that those industries measure. And I'm jumping ahead of myself. I want to teach like a stock level 2 class, but then I'm trying to not make this one too confusing. So let me just finish that thought in saying that the Dow Jones, for instance, the Dow Jones 30, they take a look at the whole industry of stocks, the thousands of stocks that are out there, and they pick 30. And it's kind of a balance of large ones, middle ones, and small ones. And then they just kind of select 30, they put them together, and then they read those 30. So if those 30 are doing well, they're like, oh, the whole market is doing well, because these 30 are a sample of all of them, and they're doing well. If those 30 are doing bad, they say, okay, the stock market's down. So you can actually buy mutual funds that are like those 30 companies. And so if you look at the history of those, they've all done very well over like a 20-year period, probably even longer, but the last 20 years, they've all done very well. So it takes the guessing out if you don't want to do the work and you want someone else to do the work for you, but you want to understand what they're investing in. You can jump on one of these mutual funds and just be able to benefit off the success of those fund managers. Okay, with that, just rehash real quick, upcoming classes. Definitely encourage you all to participate. And the one I want to highlight real quick is this life insurance class. A lot of times nobody shows up for these classes. This particular one, life insurance. It's unfortunate because that one is one of the main ones because of this. Think about it. A life insurance policy can end generational wealth in one day, right? Everyone in the family is going to pass away at some point. But if there's like $1 million that comes in after them, you're already dealing with the trauma. You're dealing with, the loss and everything that's going on. You don't want money to be an issue as well. So if you get a policy, it could just do so much for your family. It could just really change the dynamic quick. And if you have a family financial plan in place, once that money hits, you know exactly what to do with it. There's no fuss and no fighting. You instantly go to work with that money. That is a way of really taking care of your family. And that's what we have to do, because for generation after generation, we have not done that. Instead, we'll pass away, leaving bills, no money. We'll do the car washes. We'll do the bake sales. That doesn't even pay for the casket. That's just kind of a wasted effort, right? Everybody's just trying what they could try. But there's a much easier way, right? Get one of these policies. Different prices, different companies. But if you come to this workshop, it'll kind of talk a little bit more detail. I bring in experts to talk about this stuff because it's not my thing, but I just know how important it is. So we have professionals that come in, teach you all about this stuff to make sure that you get it and you have all the resources you need to be successful with it. All right, again, this is our goal, right? This is where we want to be. And I want to open it up right now. Just ask if there's any questions. That's my contact information. If you want to take a screenshot, feel free. And that's the survey if you want to take that for us. But I'm going to actually stop sharing so that we can jump back on and open it up for questions. So hold on one second. Let me figure out how to stop sharing. I think that's here. Okay, I'm back. And Selena, you're on mute.
I definitely don't want to be on mute.
All right.
So I'm sitting here with my phone right now. And Lena made me download 2 apps.
Okay.
And I got to figure out which ones they are because I don't know them. I downloaded them, but then it just this is not what I do. It was so overwhelming.
Okay.
And so I didn't know what to do at that point. So what would your advice be to somebody like me who is just totally overwhelmed by this whole— Lena's standing here laughing at me. What did you have me download? Lena? Coinbase, Acorns. Did you have me do that one? I don't know why it's on my phone. Maybe I did that when you did the NAACP one. Anyway, the point is, I've got this stuff on my phone and it's all set up. All I have to do is push a button, but I don't even know where to start. You said you only need $5, but don't you have to figure out where you're going to put it?
Yep, you sure do. So you said two things I want to speak on. One is Acorns. Acorns specifically, what's unique about that one is you don't pick the stocks at all. All you do is tell Acorns two things. You tell them, one, how much money you want to put in, right? And they pull that from your bank account. So you determine how much money goes. And then you tell them your risk level. So that's either going to be conservative, which is on one end, then you have aggressive on the other end, and what's in the middle is moderate. So you just have to decide which basket of risk you want to be in. And example, conservative, they pick conservative stocks. So like the ones that have been around forever, like the General Electric, right? If you look at their history, they've always gone up, but they've gone up very slowly, right? Because they're just very structured and conservative on what they do. You won't see General Electric like double in one day. It just doesn't jump like that, right? But it stays consistently good. And then you have the aggressive ones. These a lot of times are the smaller companies, the new companies that don't have as much market share, but they have a lot of potential. They can double and triple overnight. So, but they are a little more risky. So you just kind of figure out your risk level and they'll take it from there. So that's Acorns. And then you said you kind of have the apps on your phone, you're ready to go. So with Acorns, you kind of know what to do, but Robinhood, Stash, Webull, some of these other ones, you do have to decide where that money goes. So it's all on you at that point, right? But what you can do is educate yourself. So you might want to just find good resources. So like I said, the finance.yahoo.com is a place to start, or you can get on the business news channels and just kind of watch, and they'll talk about stocks and what they're doing. You'll hear all these analysts talk about what's going to happen, what they predict, the reasons why. Get familiar with that, and then say, okay, I'm kind of hearing some good advice. I'm going to go ahead and go that route. Or you can say, these are stores that I'm familiar with, that I shop at all the time. I'm always up in here in Walmart, and you take a look at Walmart, do a little bit of education on it, and then say, hey, okay, now every time I go in the store, I know that I'm paying myself. The better they do, the better I'm going to do. So it's just kind of your strategy, whatever you want to invest in. So yeah, your call. Any other questions?
There's one more question in the chat. Well, there's two more. Lynn wants to know if the workshops are free.
I'm sorry.
Did you hear me?
I don't know if I'm freezing or you're freezing, but you said the question was something about the workshops.
Are they free?
Oh, they are free. Yeah. And that's
everything
why
you do.
Yeah. So we're a nonprofit. So we pull money from the corporate entities. We don't pull money from individuals. We try to just keep it free for you, to just take away all barriers and say, come on in. If you're not learning this, it's because you just don't want to learn it. We don't want to put any obstacles in your way. So all free.
Awesome. And Lena also wants to know if you have workshops on crypto.
No, we have a person.
Talk to me about crypto. Talk to me about that, because I've been hearing a lot of stuff. And yeah. Talk to me about that crypto.
Okay, so crypto is it's kind of different. Like, okay, so the biggest and most successful stockbroker in the world is Warren Buffett, right? Probably heard his name before. But the thing is Warren's like, I'm not touching crypto. But plenty people have made plenty money in crypto. So I'm not telling you not to do it, right? It's just that it's its own animal. A lot of times it's based on hype. Like for instance, Facebook is trying to come out with a crypto. Just because Facebook's doing it, people are going to jump on it, right? That does not necessarily mean that it's valuable, but folks might jump on it, and then some other competitor may come, and then people are like, "Oh well, forget Facebook. We're jumping over here." So it's a lot of it isn't based on any product, any service. It's just based on the demand for it, and the demand can change. Um, you have Akon. He's coming out with his own crypto. Um, I think what is his name? A rapper with the Diplomats. Jim Jones. He's coming out with his own crypto. There's just so many crypto competitors out there, and I just don't feel confident that I know how to read it well enough to be able to really, recommend or help folks really understand it better. I bought some Bitcoin personally, and then a couple other coins, but I don't keep up a lot with them, and I haven't really been investing a lot in them. Again, there's tons of information out there though. If you go to YouTube and plenty other places, there's a lot of folks that can teach you on it. But I've just decided not to really pull it into our catalog because um, I'm trying to go off the more traditional stuff, and I don't like when people jump on a hype, lose money, and then give up on the whole concept. And I feel that some crypto coins have the tendency to do that.
Good information. Ms. Howard says, can you speak on the program that's different from the workshops? It's the one that you said people could apply for with Kaiser.
Oh, okay, got it. Yeah, so that is Money Wealth Academy, and I could maybe pull it up in the chat or try to show the slide again. And I can't remember.
Just give me. I have your contact information on there, so I'm gonna put the name of the program, and then I'm gonna scroll your contact information underneath.
I can actually tell you the URL now if you want. So I did a tiny URL, so just write the word tiny URL, TINY URL.com /M as in Mary, W as in Wilson, AAPP. And that's Money Wealth Academy. What's the PP stand for? Yeah, so that's it. Perfect. So if you go there, then you'll be able to apply, get an application to be part of that program. Again, we're not accepting every single individual that applies because we only have 40 slots. And we really want it for the people who need it the most. Some people we talk to, we do the evaluation, we figure out, you know what, you're actually doing okay. We can help you out with a couple resources, but we're not going to actually pull you into this program. The program, just to let you know a little bit more about it, is once a person goes through one of the workshops, then what we do is we actually have them do a 15-minute one-on-one with us. And that says two things. Hey, you took the workshop. Is there anything you didn't understand you need more information on? We help them there. Then we say, okay, let's come up with 3 goals for you. And we pick out 3 very attainable goals. And then once they accomplish that, then they're eligible for a stipend. So that just kind of gives them an extra little bit of hand holding, that little bit of boost they need to make that first money move. I hope that helps.
Do you believe that we can change the trajectory? I heard you mention the zero, that Black wealth is headed to zero by 2053, and we've kind of talked about that a little bit. But do you believe that we can change the trajectory?
Absolutely. There's way too much information.
What do we need to do?
Got it. There's way too much information out there. It's available if we want to know it. If we choose to, remain ignorant to it, then we're not going to learn it. It's not going to happen. But one of the things we can do is just control our spending. Every dollar that comes into your house, you control. You can say what you do or don't spend it on. So spend on things that go up in value instead of things that go down in value. Black culture, not all of it, but a big portion of it focuses on spending money on things that go down in value instantly, right? And they're big ticket items. It could be, the big rims on the car itself, whatever it might be. Taking trips to Dubai, even though you don't have money, just so you can have some Instagram pictures acting like you're balling when you're not, right? Going to the club, throwing up $50,000 in the air, giving it away. These are things that culturally we look up to people and we congratulate them when they're actually just destroying their own pockets and teaching bad examples. So then we have a lot of folks that, try to live up to that standard. They're buying Gucci belts, paying full price when, they barely have the money to be able to have transportation to get to the store to get that Gucci belt. So we just have to put our priorities together and stop trying to impress each other with what's on the outside and really focus on what's on the inside. So I think that's the first few steps to take towards that.
I love it. This has been great. I love when we have classes or workshops or seminar. I like the word seminars, but I love when we have seminars on things that you don't hear every day. And I love when we're the ones talking about it, if you get my drift. So thank you so much for coming today. Thank you for the information. If you guys are interested, and I know you are, I am scrolling Mr. Blair's contact information at the bottom of the screen. And he's a really nice guy. He's going to pick up your call and return your email. He's not going to be shady because he's not like that. But thank you so much.
I might have a little delay. but I'm gonna get to you. I'm gonna get to you for sure. Thank you. Appreciate that.
I appreciate you so much, and I hope that we can do this again because it's just so much information. I saw you had 65 slides, and we only got through 28. So I'm curious about what the other ones say. But again, thank you so much for joining us today. We're going to give you guys your Friday back. Have a great weekend. Happy Juneteenth, and God bless. Take care.
And thank you for doing what y'all do too, BSBA. Thanks for being there for us. Y'all are a true asset to the community. Glad you're here and you're helping out a lot of folks. So appreciate you back.
Thank you. Shout out to Pendrell. Hey, Pendrell. All right, you guys have a great weekend. Bye.
Thanks. Bye.